If you can't focus in life, you can't focus in the market. Every ping, every thought, every distraction costs you. The best traders don't just manage risk, they manage themselves. This is beyond the trade, where discipline off the screen builds profits on it. Let's lock in. Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. Lock in. It's time to go beyond the trade.
Beyond the Trade is for educational entertainment purposes only. Nothing you hear should be taken as financial advice. Always do your own research and consult a qualified professional before making investment decisions.
Acro, my friend,
Adam, what's up, buddy?
I am just taking in kind of the market that we've been dealing with for the last couple of days, and last week was certainly an exciting one. How did you feel about it?
Man, it was. It was crazy. Of course, everybody waiting on Nvidia. I had a just I did I mean didn't wasn't a big loss Monday, but it was minutes away from one of my biggest gains of the year, and I got knocked out of a play and lost my focus and never got back in.
That's why we're talking about focus today, because when the market is jumping around, I mean, things have been very, very volatile recently. And, I've contacted family members and friends and said, hey, market is going to be a little tumultuous here, I think, for a little bit of time. But it's important to not panic, not focus. And just like I said at the beginning, to make sure that your discipline off the screen is in check, because your discipline off the screen totally impacts your P&L. Totally.
Absolutely. I've had a problem with I'm working on a project at the house. I've got closing out the year for the company I work for, and my focus is just not. I get in there and I can lock in for that first half hour, and then my mind starts wandering, or I start working on something, and I'm just half-hearted into the market, and that seems to not be a very good thing. You end up one making mistakes, and you're just not paying attention. You miss out on a lot. So yeah, focusing is, if you're not focused, you're almost better off just take a break for the day, I think.
I think it's very important to talk about personal life and for traders and people who follow the market. And a lot of times, you don't have community. I've kind of a side thing I'm trying to do is get some people around me who want to be in a community and talk on a regular basis and meet up in person. So if any Austin folks are around and interested, feel free to DM me. I'd love to link up and kind of create a little group that meets occasionally. But it's very important to have that accountability system when you are trading, because that helps keep your focus, and
Absolutely.
somebody who can kind of call you on the table when you're doing something that you said you wouldn't do, or maybe when your job is tumultuous, much like the market. It's interesting because my belief is price action is purely a reflection of human emotions. I mean, it really is. And if you're kind of following human emotions or the stock market day to day, you feel those emotions. And
Absolutely.
you kind of feel it in your core, and it's a battle every single day between the bulls and the bears, and you're picking one side if you're making a trade.
One thing I noticed I did in the last couple of weeks, I guess I noticed what I haven't been doing. And usually Sunday night we do our podcast. After that, I'll sit down and spend an hour or so going through some charts, and I'll find my A plus setups, the ones that I'm like, okay, these are the 4 or 5 tickers that I'm going to be focused on come opening on Monday, and I haven't done that. So I haven't had a watch list. I haven't picked up my A plus setups. I haven't made that list out at all, and that hurts. It really does. It's important.
And it's difficult as a trader, particularly if you have a side hustle that's separate, or a job that's separate. I know many people do. Some don't, many don't. But it's treating trading like a full-time job, and you really have to do it, whether that's, staying up late at night. Sometimes those hours are what you need in order to find those setups.
Yeah.
It's very important. That's what we try to do. We try to, here at Beyond the Trade, just provide a little bit of insight into what we're thinking, and more importantly, kind of share our emotions, and have that human element to everything that we're talking about, and make sure that everybody realizes, we're all humans, we all make mistakes, and focus can be really hard, and particularly after a bad week. And sometimes when you have a good week, you're kind of riding high, and you think that you're invincible, and you don't put that time in. So, Acro, I'm curious to hear, I think maybe we should go through, when you have a good week, how do you focus up? When you have a bad week, how do you focus up? I'd love to hear your routines.
Well, yeah, again, I do my Sunday night list. I reset levels. I don't always clear each screen of previous levels, and most of them I probably do at least monthly. So every 3 to 4 weeks, I'm going, okay, these are, if the stock has moved, these are no longer that important. So I'll get them off my screen just so they're not creating, junk up there that I don't need to look at. So I'll focus on the main levels, resetting those. I'll get my A plus setups, what I feel are A plus, like kind of our Sunday bangers. Those are ones we're looking at, and those are technically, I guess, A plus setups.
Not necessarily.
Well, yeah, yeah.
they're
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 ones that we want to watch, I guess. So you have your A plus setups and you have your watch list.
Yep.
I go through that and get it set up, make my notes, and before market opens, I look and see what's happening. And if I try to find the one or two that really feel like, okay, these have hit this spot or they're not reacting so far. And those are the ones that I'm going to focus on when the bell rings on Monday.
So your way of focusing up is really doing your due diligence and doing your homework, and,
Exactly.
and finding what could be next, regardless of kind of how you felt during the weekend. Again, to point that we've often said is, got to have a short term memory,
Mm-hmm. Yep.
and
It's, as long as I've been doing it though, you get into these modes where, I'm looking at a chart and I'm not even paying attention to where is the RSI, what were the orbs, which are two of the things that I normally use to take trades, but I find myself just like daydreaming watching these tickers, and you lose focus on the things that are your triggers too. And it's easy to go back and go, oh my gosh, how did I miss that trigger? That was the perfect A plus setup, but I
yep,
wasn't paying attention. You're not focused. And it's kind
absolutely.
of the market telling you you're not doing it what you're supposed to be doing, so you don't deserve a win, really.
So the important thing is really to, if do your homework. I think that's what we've kind of both agreed, and
Yeah.
something that I do is, I'll look on my computer throughout the day, and I will obviously watch price action during the market. But I think it's very, very important, if you're going to take trading seriously and focus up, is to spend time at night when everything's closed and all the dust is settled, to really think about where things sit, look at the market, look at the S&P 500, look at the Nasdaq, look at small caps, and see how is everything kind of shaping up, right? What does our trend look like? What does our trend feel like? And then after looking at the broader market, I then look at the big players within it. So for me, I generally go through all of the main S&P 500 names, whether it's the top 10 or the top 15. I tap through, I look at every single chart and some additional ones. I mean, you can see many off to the side that I love, or at least watching right now, and keeping an eye on those and trying to get a feel while the market's closed for how each sector is kind of moving. Guarantee, a lot is tech right now. That's that I'm trading. That I know you've traded a lot too, Acro. But it's very important to put in the time, whether it's scrolling through TradingView in your bed. I know a lot of people may not be a fan of, studying in bed, but I am. I'm just flipping through trading view charts in bed, looking at the daily chart. I'll switch to the weekly, I'll switch to the monthly to try to get a full picture in mind, zoom out and then zoom in, and then try to make a plan for the best setups that I think are presenting themselves.
Yeah. I guess for me, for doing more short term options, I look at the daily, the 4 hour, the 1 hour, and then sometimes 30 minute, mostly 5 minute, and I'll scroll around through that. I'm looking for those patterns and seeing what it's done on a much smaller basis than, looking for long term holds. So it's a little bit different.
Yeah, and for me, what I love to zoom out, right? It's very important to zoom out. I've said this, numerous times, not just on the chart, but also on your life, right? So when we're talking about the chart, it's important to notice we've had several green monthly candles. I'm looking at the monthly on the NASDAQ right now for those just listening. And it's very common that we have a red month, and oftentimes that leads to a series of red months, right? And it's not going to just go up any forever, right? There will be, dips. There will be times to look for the market to breathe, right? And things have felt kind of frothy recently, and so for focus for me oftentimes is resetting my emotions and always trying to be that internal devil's advocate. I always think, regardless of how bullish I feel, it's important to consult that bear side in me and think, okay, if I'm a bear, what am I looking at? What is the opportunity here? To be honest with you, looking at all these data center stocks, APLD being one, when something goes from, all my lines are crazy, but when something goes from 44 to 40 in the series of 6 months, you should consider that there's probably going to need to be a breather here somewhat shortly. So
Yeah.
focus for me looks looks a lot like trying to be the devil's advocate in every single scenario.
It's interesting you bring up data centers, and not really to change our subject of what we were titling here, but I spoke to a buddy who I haven't spoke to in quite a while. He's an engineer for I don't know if I should say the company or not. Let's say he's an engineer for for a major drywall manufacturer,
Okay.
and his company has. I asked how he's doing. He just moved. And he says, "Oh, great! I'm in a new division now. I'm running our new data division." I'm like, "What is that?" He says, "Well, we started a whole new division doing ceiling tiles for data centers,
Wow.
but they're structural tiles, so they actually create ductwork as they install them, and they can run all the cabling, the wiring. You can walk across it, on this basically a lack of a better term, a just drop ceiling."
Yeah.
And he said they went from zero sales to projecting over 7 billion.
Oh my goodness.
And they've got one of the few products that is being picked up by massive data centers. So of course I go like, oh, wait a minute, what do you guys trade under? He goes, sorry, a couple of years ago we were bought, and it's all private now. But interesting. I mean, they're not there. There's a couple of companies obviously that do the same thing. You know who the ceiling tile companies are out there. So I would, it's just one of those things, it's another aspect of a product that is being used in these things. And there's so many of them being built that the supply that they have to produce is mind boggling to me.
Yeah.
But so, yeah, we talk about data centers. I guess my point is think about other things that are going into these centers that are being used, from, most of them now are obviously self-contained chiller systems on the water recycling, but there is some water usage, so they're addressing that issue. The biggest issue, obviously, is still the power issue. But yeah, I thought it was interesting because we had never spoke about data centers before, and that became the topic of conversation for most of the hour that we were on the phone. So I thought it was interesting anyway.
That's super neat. Huh.
I mean, think of wiring and cabling and all the stuff that's being used by the truckloads in these places, and that might be a good spot to look for some outliers.
Yeah, and I think when you're assessing new plays and things to get into, honestly, we should be hoping that the market goes down a little bit. Therefore, we can get good dip entries into stocks that we like. So with this market, pull back a little bit, we have the opportunity to really look into new, growth plays that have ran up a lot. And, I saw a chart that a friend sent me that many of these companies that have gone, 4 to 40, right? They're down about 40 or 50%. I mean, we've talked about APLD a ton, and it's from 40 back to 20, right? So now's a really good time. IREN is another one, IREN, that I know a lot of people love. These are down 50-ish% from highs. And so a good thing that I would recommend doing is talking to ChatGPT really, and asking, okay, what are the big players in this space that I'm hearing about, and then going and looking at the charts, noticing this pullback. I mean, I'm looking at Iron right now, and it's gone from 75 down to 42, and I'm trying to look for some support below, and I really don't see much support until the 20s. Now, that's something that scares me, and it's important.
Hmm.
It's important when when you're looking for trades to not try to catch the falling knife, right? Never try to be the guy that catches the falling knife. The big money is going to make the moves. We are small fish in a big sea, and our job is to just find the horses that are going a certain way and then hitch a wagon to them. And so once we see that signal, then go. But we don't need to be the ones sticking our neck out to try to make the bottom happen, because I guarantee you your bid is not holding up the market.
Yeah, exactly. Exactly. Looking through some of these on a daily, they're most of these the big names are not very far off from all time highs.
A lot of them. Well, you talk about some. You got Meta,
Right. Meta's one that I actually had picked for my Sunday banger.
but
It's at an interesting level. I think that 595.
it's right below 600. There's a lot of volume here. This is kind of a place where it broke out and found a lot of support after the tariff ordeal back in April of 25. This is it, Meta's trying to find some support here. I know we talked about Tesla, and we kind of had me and you had a little gamble going. I think you said it was going to 440 or 460 or something. I said I think maybe it'll go 360s first, and we kind of had
Yep.
this box highlighted from about 410 to about 470, and I think on Sunday Bangers or something, I said, guys, you got to watch when Tesla goes back into the 420s. If it rejects that, it's very, I mean, I hope that you traded that upside. There was plenty of upside there, but it does risk a move down to 365 area before moving back up. I think a lot of stuff is kind of taking a breather, and then it needs to find some support before we go higher.
Yeah. Yeah, and it's true though because what was it Thursday? I think Tesla knocked on about 430, and then just flat out rejected.
And it's this market can be very confusing. I call it a kangaroo market. And often when you have the kangaroo market, you just feel like you have no idea what's going on. I made a comment on Twitter. I said the pullback doesn't start until we see a gap up and a bearish engulfing candle. So gap up, obviously, price opens higher than it did the last day, and then engulfing candles when the spread of the candle, subsequent candle, covers the entire price action of the previous day. So the previous day's price action on Wednesday, that November 19th, was highs of 667 and lows of 658. Well, SPY opened at 672, which is higher than the previous day's whole range, and then closed lower at 652. So that is something to note, because that's a big mentality change in the market. For Nvidia to have good earnings, they beat. So it's important to note that even though something beat, even though everything is kind of a bullish signal, that should not make you lose your focus and fully get married to one bias, right? You're going to get bagged. If you fully
Yep.
marry to the bull bias at all times, even when financials say otherwise, you can get yourself in trouble. That's why many people who say technical analysis is voodoo or men's way of doing horoscopes or whatever. I've heard that. But you look at it and you say, okay, well, there's no way that Nvidia should have gone down. But it's the whole mentality of the market. And when you see kind of a total mentality change of we're just going to sell everything, that is scary. And it's important for us to step back and say, right now, I am all cash at
Same
growth.
here. I
All
did the same thing on
cash.
Friday.
100% cash. And pretty much all the traders I talk to are 100% or majority cash right now. And when you're hearing that, it should be a little spooky.
Yeah, for sure.
So for me, my important thing that I'm trying to tell myself every single night is do not get married to a bias. Do not say this is going to go up tomorrow. I'm going to trade up. No, I'm going to trade calls or I'm going to buy shares no matter what. Right?
Yep. And I mean, we go back to last week. I think I called out Boeing as one of my bangers, and it just completely failed. It never hit and retested any level that was of any importance. We have those 197. When it's under 200, I really pay attention more to Boeing. But at 197 all week, it was just down, 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 down. So again, it's back on the list because it hasn't had that upward move yet, and it's a ticking time bomb in a way. But when we give out any kind of ticker suggestion like that, it's always, of course, based on what is the market doing.
And
I like Boeing to the upside, but it's not ready yet. It's not ready yet. Wait for your signal.
exactly. Even when you identify something as what you think is an A plus trade, do not get married to it. Okay?
Yep.
Do not force it. It's important to, no matter how much studying you do, to never force any trade, because if you try to force it and you think there's no way this could possibly go wrong, should be a red that is a red alarm inside of your head saying that you need to evaluate the other side. And I like
Yeah.
to bring up interest rates when I talk about this because a month ago, everyone in October, everybody was basically, you go look at the CME Fed Watch and it's a 95% chance of a 25 basis point cut for the December meeting. Okay, well, when everybody's piled in one boat, you should probably start thinking about the other boat. This is part of your homework, right? And so as of last week, that went down to a 30 or 40% chance. Granted, it jumped back up to about 70 or 80. I mean, it is wild out there, but that is part of your homework. Understanding macro is a huge player in the daily, activity of trading. And so if you know that 95% of, traders or whatever, they're basically pricing in a 25 basis point cut, any single ounce of bad news or hawkish Fed is going to really stink it up, and it's going to make the market drop.
Yeah, and I don't know that we're going to see it this year, but we used to always call it the Santa rally.
Yeah.
That mid-November to almost the end of the year used to have some pretty nice moves in it.
Well,
But man, this year I don't know.
I like to look back. I mean, it's very
Yeah.
important to look back. Look back to last year. What was the Santa rally like last year? Okay, well, the Fed meeting last year on December 18th was was a -3% day on SPY. -3%. Okay? And then things got very, very volatile. Granted, we raced back up to basically where we started on that day of that Fed meeting, and that was the day that they signaled, "Hey guys, we're actually doing what we said we're going to do, which is keep rates higher for longer." And so immediately traders started pricing in way less cuts, and what's that going to do? that is going to make the market volatile, and you see it struggled. But even when there's a kangaroo market, right, like right now, you need to know there are bears that are playing this. Like there's a lot of people that are liquidating, there's a lot of people that are selling. There will be vigorous rallies, big time. In any volatile market, bear market, whether, no matter what we're in right now, there's been some downside, but it's important to know that the rallies are going to be very aggressive and they're meant to trick you. They're
Yep.
not, programmatically going to trick you, but they will trick you. And you know, say you bought this candle that went a little bit lower in January of 25, or say you sold everything there. Well, it went back up to all-time highs. I believe that if we are to make a more significant correction, even whether it be 5% from here, 10% from here, if that even happens, I believe we're still going to see all-time highs again before that happens. It has to, like we mentioned multiple times, things don't just top or bottom in one single day.
Right. And you're not going to catch the top or the bottom on your entries and even your exits. So, I mean, find a place that you're comfortable when you're getting in. Don't worry about, well, it already moved up some. This is probably over. Look at the signals. Look at your levels. Look at the, the stuff that you use personally to decide when to get in and when to get out of a trade. You got to, define your setup. And when you see it, time to take it, really.
Yeah. What are Acro, what are some of the biggest lessons that you learned? I know we were trading together back in 22 and 23. What were some of the biggest lessons that you learned in that, little that it was about a 20 to 30% pullback in 22 and 23. What were some of the lessons that you learned during that volatility?
Oh, God. That's a tough one because back then, I was still sorting my oats, right? I was still trying to figure out this whole options game, really. What the biggest changes for me now have been buying time. That's changed the way I trade quite a bit. And I used to be a whole lot more rogue with stops. It was nothing to have a 40, 50, 60%
Mike,
loss that you're holding on to.
Mike, get closer to your mic.
Oh, sorry.
Say that
But
again.
yeah, it was, I guess I was more rogue back then. I didn't have as many rules as I have now. I didn't really set stops, and I still don't really have a live stop going while I'm in something. I'm just there. If I'm in a trade, I'm watching it. And when it starts getting close to my 20% down, that's when I start opening up the order screen to get it listed. But I don't typically, and that's just my own personal preference. I don't set them. I feel if I set them after I buy it, I kind of forget about it and walk away. So as long as I'm able to watch it, I don't set it until I start getting close to where I would normally get out, and then I open up the my screen to get rid of it. But again, that's personal preference. If I'm going to call into a meeting or something, I definitely set it and go and wait for the ding on my phone
Yeah.
when you're in the meeting or something. But it's patience. I've learned a lot about. I've learned to read charts better. It's a little bit of everything for me. There's no one big thing that sticks out. It's just part of the education and watching charts day after day after day, and you start picking up patterns, and you say, man, this looks a lot like it looked sometime earlier this year, and you go back and you look at your screen and you see the same patterns from July or whatever.
Yep.
Those are
Yep.
good indicators.
Be a historian. I'm not much
What
for
about you? How much you've changed now because you're buying more commons than your option trading?
So for me, the most important thing that I learned back, in 2022, 23, and even the beginning of 25, whenever we started to have this little pullback due to the tariff talk, I would say the most important thing that I learned is to hold mostly cash and to be in and out. If I see that the market is making lower highs, and a lot of growth names are getting taken out back. It's kind of my signal. When a lot of, you look at Oracle, Oracle's down about 30% from highs. Microsoft is down a good amount. Meta's down a ton. But what goes first is the smaller names, the higher growth names. So for me, it's really picking up on that pattern and following everything in the food chain. And then when you see those trends, to try to be mostly cash. And I'm not necessarily adding to shares, commons positions, but if I do, like, I would never tell a friend or a family to start buying anything right now in big slugs. I would say if there's companies that you like, say you really like Oracle, now's a good time to potentially start dollar cost averaging. A lot of, there's been a lot of skepticism around Oracle and CoreWeave and the kind of circular, and Nvidia and all the kind of circular money flow. But I think if there's stocks that you like and they've had a significant dip, Microsoft could be one of them. Dollar cost averaging into those, if you're taking commons, because you can't time the bottom perfectly. So the best thing I'd say is DCA. And then when it comes to options, it's to just be mostly liquid and to trade whatever is in front of you and to not be locked in on a bias. So basically, for commons, DCA. For options, stay liquid and do not be married to a bias. Because a lot of times, what you'll see in these kind of lower highs market that we are seeing is you'll see maybe a gap down, and then it'll rip back up into lunch, and then midday it'll kind of mellow out and then fall back towards the end of the day. You could see 3 different swings within the same day. And
Yeah.
that, when you're in an uptrend and you're just consistently making, higher highs and you're getting support, higher lows, higher highs, it's okay to buy those dips. But right now, I am not a dip buyer. Not a dip buyer. If anything, DCA. And then options, stay liquid, do not get married to a bias.
Good stuff.
I think it's time.
It's time.
It is time for Sunday
Bangers.
Bangers. Do you want me to go first?
Yeah, go ahead. I don't have a whole lot this week, really. So, yeah, you go ahead.
I've
You
got
put a lot more thought into these than I do, I think.
I've got 2. This one I would consider an A+ setup. This one was so incredibly weak. This is Netflix. Netflix was incredibly weak on Friday. It was actually red when a lot of stuff was green. The market closed up 1%. If you zoom out on Netflix, they actually just recently had a 10-to-1 split. They were $1,000. Now they're $105. But if you look at the volume profile, there is a massive volume gap down to $99. So an ideal trade for me is if Netflix opens green, I would like to see it potentially get up to 106 area, reject 106. Hopefully we open green. Netflix opens green, and then it gets to 106, 105, and then I take puts down to 99. You see that the rounding top, the lower highs continually. Netflix was topped out at 133, rejected 127, rejected 125, rejected 115, and I think this is an A+ setup for me. Taking a short, but I'm not married to it. Netflix could rip up. I'm just looking at the chart, and based on experience, based on things I've seen, Netflix looks like a 99. Another one I would say is Carvana. This one's been in the news a little bit, but I think this is a absolutely wonderful short. And I know both of my Sunday bangers are shorts, but I can't help but look at what the market is telling me. Carvana not only double topped at 410, 400, rejected 357, and you'll notice their recent earnings at the very end of October gapped them down from about 350 to 300 pretty much. And then this gap attempted to get filled by some uptrend, and then wicked down. Sellers stepped in quickly to reject Carvana from 340s and closed the day in the 330s. Another day last week, Carvana gapped up to 340-ish, dropped down and closed about 310. This thing is so unbelievably weak. You zoom out further, you look. I use volume profile. This is the indicator visible range volume profile. You can get it with the cheapest trading view subscription, and you look, there's a massive volume gap down to 260. Massive. I think 260 is 99 on Netflix, 260 on Carvana are what I'm watching for this week. Not married to him, though. Not married to him.
Yeah, Carvana's my love to hate. I'm looking at it when it was back down at $4 going.
Yep.
With the real estate they had, those cool glass cages with the cars in it, I'm going, this company's got a lot of money invested in stuff. They're worth more than the $4 a share. And of course, I dropped the ball, and here we are at over 300. But
Something to think about with Carvana is there is a certain relationship between the CEO of Carvana and his father. The father runs the firm that is a private firm that handles all of the lending. If you just type in subprime auto, there will be an ad to buy a car from Carvana. I am not joking. And even with all the news that's been out recently, this will pop up. So what they're doing is the father owns a lot of shares of Carvana. And you'll see it on SEC Form 4. Google it and just look at the Form 4s, which are the forms where it shows the cells. And my belief, and a lot of people believe, and there's ongoing suits with Carvana, is that they are taking whatever loans they can do. They're giving everyone a car, no matter what your credit is. They're using this private company to back it up and to eat all the losses so that Carvana can just do volume. And then what he's doing is the father's selling shares to prop that company up.
interesting.
Look into it. There's a lot of DD out there, and a lot of people believe this. So be careful on this one. Mike?
Well, my two are, I've got to go back to Boeing, BA. It kind of fell into no man's land this week when it lost the right about 187 support, 187, 188. And it's now sitting there in this range where if it doesn't make a move back up early in the week, I think it can go all the way down to the 160 area.
I completely agree.
I'm looking for the market to change, and this is going to be directly tied to the market. They've had some great news. They've got a bunch of big orders that came in last week. But I mean, it's Boeing, right? They're the company to love to hate. It's like as big as they are, and they've had so many missed earning reports that it gets frustrating, and it just takes one thing in the aviation industry to go wrong, whether it's them or not, and their stock takes a big hit. So it's risky, but it pays well on the upside for options. So I would keep an eye on it. If the market's looking like it's going to be an up week, I would look closer at Boeing for a decent move. A $10 move on Boeing is big on options.
Uh-huh.
And then Meta, it's another one of my love to hate companies, but man, it has gotten beat up so bad, and it's at a really interesting level here. It's bounced around daily for all week at the 595.
About 595, yeah.
And it goes under, comes back, goes under, comes back. So I'm looking at this. It filled the gap that it had back in May of 25. I think it was mid-May.
Yep.
So it's finally filled. There is another gap down there. There's another gap that starts at like 570.
Mm-hmm. And
So
goes to
it's
about
either going to
550.
right. So that range I would look at, but I would look at if it gets a good clean break over 595. I think it'll be a good long
Yep.
on
And
options. But
even though we've had a little bit of a bearish bias here, a little bit more of a cautious bias, maybe you think a lot of people are becoming bears right now if we're kind of talking about it. That may mean that we're primed for a nice little bear market rally or just a rally in general back to highs. So do not take the information that we're saying is go short everything in the market
no,
I want everybody to be aware that there can be huge rips, huge. And with the way that things have been beat up, I would expect it. I don't know if it's
Yep.
now, I don't know if it's next month, but it's going to happen. And don't be on the other side of it.
There's been a lot of liquidity out there right now. When you look at what's going on with Bitcoin down in
Mm-hmm.
the 80 some thousand range, there's a lot of money that's come out that people are going to look to put somewhere.
Mm-hmm. Yep.
So, and what's the likely target is those stocks that have lost the most in the last, during the month of November at this point.
Absolutely. They're going to come for them eventually.
Let them be the dip buyers. Let them change it and then get in and ride the coattails.
Yep. Yep. All right, man.
That's all I got, man.
Well, thank you everybody for listening. Have a
Yeah.
wonderful week.
Be
And
patient, do your homework, let the market show its hand before you just go jumping in anything, and we'll all be fine.
amen to that, man. Tell everybody, tell a family member you love them. Bring positivity to those around you. Love on others, care about others, and be a good influence in the world.
And happy Thanksgiving to you guys. We won't see you until after.
Happy Thanksgiving, everybody.
All
See
right.
ya.
Night.